Well, Bitcoin has had a pretty rough last few weeks, but last week it actually made some decent gains. Is this the Bitcoin bottom? I'll answer that, plus analyze the markets overall. We'll look at the day trade of the week, which is also on Bitcoin, and we'll run a market scan in search of opportunity. So since November, Bitcoin and many of the other cryptocurrencies have sold off pretty sharply, and they have fallen into areas of support. And last week, Bitcoin managed to break its downward trend line. So the question is this the bottom? Well, I have a pattern that I look for. I call it the crash reversal pattern. It involves breaking a downward trend line from a rising bottom. And if we jump to the chart of the Bitcoin ETF, GBTC, which by the way is one way to trade Bitcoin through the stock market. It's listed on the OTC bulletin board. And again, symbol is GBTC. And you can see here that the downward trend line on the daily chart has been broken, and there's a little bit of a rising bottom there. Now, volume is not all that strong. The Stockscores are still fairly weak, but they're starting to get better. I think that this could be the start of a turnaround. And one of the other reasons is that it's also come down to this support zone that it's hit a number of times. So I think, maybe the probability of success in terms of finding the bottom on Bitcoin here is about 60%. But if it works, it's going to be quite profitable. So although the success rate may be a little lower than we like, the upside potential is higher. And that makes this a trade worth considering. All right, let's get into this week's market analysis, starting off with the US markets. And you can see that the S&P 500 broke a little downward trend line and has started to build rising bottoms. That's a good sign. It had a little bit of weakness on Thursday, and I worry somewhat that this is a falling top pattern. If we break this upward trend line right here next week, we could try to retest this one. So this is a neutral chart to maybe slightly negative. Keep an eye on that intraday 60-minute chart to help you figure out where things are going to go. On the weekly time frame, of course, we broke the weekly upward trend line. We did not do so from a falling top. And so this could be just the start of a sideways trading range for the S&P 500. The critical thing is whether the S&P can move back up to the highs, at which point it will likely get stuck. If instead it rolls over here and moves through that 420 level on the SPY, and having done so from a falling top, well, then that will indicate that we're likely to see more weakness. I actually think that that is the more likely outcome. But in the next week or two, we may see the S&P try to bounce back a little bit. Again, the critical thing is if it breaks down from a falling top, after the break of this long-term upward trend line, we could see lower prices ahead. So watch out for that. It could be a problem. NASDAQ 100, we had lots of volatility this week with Facebook and Amazon causing the market to move all over the place. We are still in this little downward trend. We tried to break it during this week, but failed. And until we can break that downward trend line from a rising bottom, I want you to be cautious with tech stocks. IWM, which is the small cap sector, is working on a little head and shoulders bottom here. It's very small. It shows up more so on the intraday chart, but it broke the very steep downward trend. Now it's got to work on breaking this more shallow one. This rising bottom that we see here on the right side of the pattern, if it can then culminate with a break through 204, we should see it move back up towards 212, 213 before it encounters resistance. So I do get the sense that there's a little bit of retail buying coming back to the market. And of course, retail traders tend to like the smaller cap sector. And so hopefully we see that start to recover. Canadian markets, here is the chart of the XIU. The Toronto Stock Exchange is doing better than the US market because of that heavy weighting of energy stocks. And you'll see in a moment that energy is a hot area. Looking at that weekly chart, you can see that it really hasn't made a strong break of the upward trend line. It's more gone into this sideways trading pattern. And it's kind of a tale of two markets in Canada. It's the energy sector plus everything else. Banking stocks holding up reasonably well because they are quite correlated to energy as well. On the TSX Venture, which of course is those microcap stocks in Canada, we are still in the downward trend. We have not broken that downward trend line, but the optimism can be seen here with those rising bottoms. And if we can just break up through that downward trend line from these rising bottoms, we could start a recovery. On to currencies, and of course here's the US dollar, which made a strong break 2 weeks ago from this little flag pattern, but last week it gave back all of those gains and more on heavy volume, and that is a concern because it's threatening the upward trend line. It has not broken it, but where last week I was quite bullish on the US dollar, now I'm not so sure, more so neutral right now. There's that Bitcoin chart, but this on the weekly time frame. And you can see that long-term support that is holding so far. We had dipped below it 2 weeks ago, came back, and now trying to break that downward trend line. Still need to see that break up from a rising bottom. You can see back here, we broke the downward trend line from a slightly rising bottom, and that led to a few months of strength in Bitcoin. It could happen again here, work to be done, but something to keep an eye on. Ethereum, which is another one of those highly actively traded cryptocurrencies, trying to break its downward trend line. It has not done so yet, but it did make a little break up from a rising bottom, very slight rising bottom last week, and that could turn into something. And on to interest rates. This chart goes up when interest rate goes up, and you can see a little jump last week, and maybe we will get through this resistance level, start the recovery in interest rates, which is really a recovery. It's more that the bond market is going down, interest rates go up as they start to price in the expectation of Fed interest rate raises in the months to come. And finally on commodities, there you see the gold chart. It is stuck in a trading range. Nothing really to see here until it can break out of the range or break down out of the range. For now, I would say it's neutral on gold. Oil, the hottest market that we have right now, it is ripping higher, but getting overbought, getting emotional. I worry that we are setting up for a pullback. I think if you're a day trader, a swing trader, there's opportunities in trading the energy names, but to be initiating positions as a longer term trader, I think is a little bit foolish right now. Finally, the fear chart. You can see the fear has come down, but it's still elevated. We shouldn't take our eyes off of this, but so far the market has not succumbed to major panic. So my ratings then, neutral on both time frames for US and Canadian stocks, the same for gold, and bullish on both time frames for oil. Stocks are stabilizing as some traders bargain hunt stocks that have sold off very sharply. The buyers really don't lack, do not yet have the confidence, and so you want to watch for is that to be very selective with new trades, because the buyers aren't showing that enthusiasm yet. They're maybe not as worried as they were, but they're not chasing stocks higher. Bitcoin is bouncing off of support and may have made a bottom. Interest rates slowly rising, gold is stable, and as I said, oil is hot but overbought. All right, let's now look at the day trade of the week, and this week we're going to look at a day trade signal that came on the exchange traded fund that represents Bitcoin. So if you don't want to buy Bitcoin or Ethereum for that matter through the normal crypto markets, you can actually do so through the stock market. The symbol for the Bitcoin ETF, and there's a few of them, but this one is GBTC, another one is BITO, and for Ethereum it's ETHE. We had a action candle break on GBTC at the open of trade on Friday. However, the chart pattern wasn't great on the longer term time frame. So in that scenario, I like to wait for a second signal, which means wait for it to pull back and then move back up through the action candle. You can see that all happened here. There's your action candle at the open. This, of course, is the 2-minute chart. You pulled back and then you broke out through the action candle, that second signal, and went for quite a nice run. For every $100 of risk, you would buy 760 shares on this trade, and that was $19,500 in capital, but of course you can margin it 3-to-1, and so that meant $6,500 of capital to do this trade, which ultimately earned 17.8 times risk. That was a $1,780 profit, a 27% return on a very quick one-day hold and day trade. All right, now let's take a look at the market scan tool on Stockscores. We're going to run a market scan this week in search of stocks trading abnormally and whether they have good patterns. So I run the abnormal breaks US. You can do abnormal breaks Canada as well. And here is the US scan. It found 34 stocks. What we want to see is stocks behaving abnormally and breaking from good patterns. So this first one is pretty good. It has a little spike of volume, spike of price, breaking this little downward trend line. The issue with this is there's going to be fairly strong resistance there at about $1.20. And so this chart is improving, but I don't think it's great yet. I would give it a 6 out of 10. As I cycle through these charts, I'm looking for certain themes. I'm looking for breaks up from rising bottoms. I'm looking for breaks of downward trend lines. Here is ANY, which was also a good day trader last week, and you can see breaking that downward trend line from a little rising bottom. Very strong volume on Friday. You can see it traded over 200,000 times, plus over 80 million shares exchanged. This actually looks pretty good. I would give this a 6.5. Have a little bit of resistance there, but the next major zone of resistance is in around $7. Wouldn't surprise me if this pulls back a little bit in the short term, but I think it has decent potential to move upward. And we can just continue to look through these charts. I'll pause on any that I think are worth discussing. ENJY trying to bottom, not really a strong signal that it wants to go higher yet. This stock has a lot of resistance to deal with, so it's not quite ideal either. The nice thing about this tool is you can run the scan through the entire US stock market, and instead of having to look at thousands of charts, it's whittled it down to, in this case, 34. And with the gallery viewer, once you know what to look for in the charts themselves, you can go through them very quickly and really save yourself a lot of time and focus in on opportunity. So I like to run this scan about half an hour before the market closes, and it takes me maybe 5 minutes to go through the US and Canadian markets combined and just try to pick out those charts that have good opportunities. It's a tool that's available to investor and active trader members of Stockscores. You can go to stockscores.com and learn more about that. Okay, CTVA is breaking from what we call a cup and handle pattern. Not a perfect break because it's not quite through resistance yet, but there you see the cup, there's the handle, and you're breaking through. Volume a little higher than normal. This looks pretty good. I'd give this a 6, 6.5 as well. A more expensive stock pays a dividend of 1.17% historically. Not going to be a fast mover, but if you're looking for more of a stable, safer stock in your portfolio, US side, that's something to consider. All right, so that pretty much finishes what I wanted to do with the market scan. Hope you've enjoyed it. And if you have, please click on the like button, leave a comment, subscribe to the channel, and most importantly, trade well.